Happy New Year, fam. And don't worry, I know the markets have been sliding and it's not looking good, but I got some good news for you. 2025 is going to be a banger, so don't worry about subscribing, tapping the like button, or looking for the coaching and Discord link. Let's dive right into today's video, talk about the market and why 2025 is going to be great, especially when the markets open tomorrow. First, before we get into the video at hand, my free masterclass webinar is this Friday, January 3rd, 8 p.m. Eastern Time, 5 p.m. Pacific. Every student that's ever attended said they learned more in the hour they spent with me than anywhere else. Limited spots remain. We always fill up, and there's so many people that can't make it because we're full. So you definitely don't want to miss it. Check it out. Link is below to register. You don't want to miss this webinar. I have a huge announcement as well as a Q&A to answer your questions directly, and you can hang out with me and learn. I hope to see you guys there. I know things look really bad in the market. There's been a lot of pullback. Stocks have been sliding all week. MicroStrategy's down like $40. Tesla's down $40. Meta's down over $20. Palantir's down $5. SoFi dropped $1 and change. SoundHound dropped as well. Every stock is down. SPY is down $20 almost. And it's really a stressful time for a lot of traders. But let me explain to you guys why this is not a bad thing. This is great. This is really good news. So I want you guys to breathe, close your eyes, woosah, because guess what? This is a buying opportunity. And I'm going to explain to you guys why it's a buying opportunity, why you should be buying, and why you should not be worried at all. And tomorrow, the markets are not going to be as good as they were a few months ago, but they're going to be better than they were previously. High probability the market's going to consolidate and start working its way up, and volume will start to pick up as we get through January. Now, the situation right now is completely different than it was a year ago. In fact, it's not even the same market, really. We have completely turned everything around, and for the better. The 10 and 2 yields are now on the correct axis, and the 10-year is now higher than the 2-year, which is great. The axis is above zero. Inflation is also dropping. The Feds have been cutting rate. PMI services have been expanding forever, it seems. And PMI manufacturing has also improved. So there's a lot of things going on that are major improvement. And not to mention, the uncertainty of the election is now over. And like I said many times, barring our political opinion, the mere fact that not knowing who is going to be in the office is a pretty big problem. It's now been resolved, and now we know who's going to be in office. So at least we know the direction. Financials, small caps, even mega caps are going to do well. There's a lot of good potential in the market, and we are now facing tailwinds as we go into the new year. The reason why stocks have been dropping so much over the last couple of weeks is because of tax loss harvesting. What this is, a lot of investors take losses on their losing positions in order to offset their capital gains from all the positions that they took profits in. So this is what's really been going on, and the reason why the stocks are sliding, plus uncertainty because of tax loss harvesting. As we start and the markets open tomorrow, things will definitely be better. There might be a slight dip in the morning. It's hard to exactly say what's going to happen, but it's real likely that the stocks are going to start consolidating and slowly moving their way up. Typically, we see in January volume low. Stocks don't really go up a whole lot. Some do, most don't. It really kind of hit or miss, but most of the time it's consolidation. And that's really what happens. But like I said, this is a different January. It's an election year, inauguration month. A lot of things are different. The economy is better. But to keep it real simple, it's a buying opportunity. This is the time to get into your favorite stocks and sell cash secured puts, because any puts you sell now and sell them in the correct way, it's more likely that you're going to succeed during this time, because stocks have already slid, they've already pulled back, and they've already dropped. So if you sell puts now at a safe level, even if the stock did drop and you get assigned, you're getting a major discount on your favorite stock. For example, Tesla was at $460, then it dropped to $440, then $420, then $410, now it's $405. So now if you sell a $360 put going out to next week, you're going to make all kinds of juicy premium. And this juicy premium is going to be awesome because you're going to be 40 something dollars out of the money. Let me ask you a question. If Tesla dropped, would you be okay with buying Tesla right now at $350? Pretty sure you would. It's $54 lower than it is now, or even at $360, which is $44 lower than it is now. So when you think about that, if you go out a week to January 10th and sell puts on Tesla at $360, you're going to collect several $100s in juicy premium. And then if you get assigned, who cares? You have Tesla at $360, right? You wanted the stock anyway. But it's a very, and I mean a very, very high probability, like 95, 98% that the stock won't fall below 380 or 390, let alone 360. So essentially, you're either going to get the stock at a discount or you're going to collect lots of mad premium, hundreds and hundreds of dollars every week. This is a buying opportunity. As long as you understand the stocks you're looking at, they're good quality, wholesome stocks, and you're selling cash secured put at a very good delta, or naked puts if you prefer, as long as you understand the risks and understand margin. You can sell puts on Tesla and other stocks like it. For example, in a time like this where the stocks have already slid and it's bearish, you really want to sell a 15 to 20 delta. And now that stocks are kind of at a low from sliding due to tax loss harvesting, it's unlikely they'll break most of their support levels now. So we probably won't see a whole lot more of a drop unless some bad news or geopolitical tensions happen. But I like to say if you want to sell puts at a very safe delta, this way you're not really at a high risk of getting assigned, anything between 15 and 20 delta right now will be pretty safe. I mean, very safe, honestly. And if you run puts on the correct stocks, you can get away with 25, especially considering the market's already made a lot of its pullback and tax loss harvesting is over. So let's go through a list of the stocks. I'm going to show you guys which stocks I would sell puts on, show you the chart, talk about Delta, and right off the top of my head, Tesla, MicroStrategy, Google, Apple, Meta, Tesla, of course, MicroStrategy, Walmart, Palantir, SoFi, SoundHound, all good companies to start running the wheel strategy on, selling puts, selling covered calls. Palantir has become a really good stock for that. But let's look at the chart and let's talk about the different stocks and show you a few examples of how you can take advantage of the market right now. If a lot of the things I'm talking about in this video, like tax loss harvesting and Delta selling puts and the wheel strategy covered calls, understanding the charting, getting into stocks, if all these things are confusing you and you're trying to learn, maybe you just started trading, or maybe you're trying to retire early, I would love to help you. I offer a full training course, Discord, and one-on-one coaching. I would love to help you grow your portfolio and take control of your financial freedom. And I'm driven every single day to help others just like yourself achieve your financial goal. You guys can sign up at any time. InvestWithCorey.com. The link's in the information box below. You just click on training and watch the video on the website, which will answer most, if not all, of your questions. And then you'll be able to book a call with my team and I so that I can help you achieve your goals. And you can see on the screen all the comments of my students that have made lots of money in 2024. 2025 is going to be an amazing year. It's going to be a banger, but don't take my word for it. Let's take a listen to what my students, Shane and Josh, had to say.
When I first started off with options, I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple, and I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on, I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up 6.4 thousand.
You went from day trading to my course and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. You know, just 1 month, it blew away, you know, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already like in stocks. And now I'm up to 75,000.
For anyone who's thinking about joining, is anyone can do this. It's just really like putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly can't thank Corey enough.
Well, you heard my students Josh and Shane had to say this could be your success story too. All you have to do is go to investwithcorey.com, click on training, and this video will have a lot of the answers that you're probably asking questions to right now. Then you can book a call with me and my team so we can help you grow your portfolio. So right here, we are looking at Microsoft. Now, Microsoft is a stock that Dan Ives and Tom Lee have both said is going to be very strong in 2025. And Dan Ives, obviously, a little bit more bullish than Tom Lee on this stock because he's vocalized his opinion a couple of times. And Microsoft is honestly going to be the first company to hit 4 trillion. That's what Dan Ives said. And when we sit here and we look at Microsoft, we can see we're pretty much smack dab in the middle of the overall average price over the last 8 to 10 months. And it's likely, highly likely, that going through January, it's going to slow down as far as its drop. It's probably going to come back a little more to maybe 415, 410. That is very possible. We got a lot of support down here at 415. So going out to next week, I would actually be very confident in selling 405 and 410 puts. And this is going to be pretty lucrative, especially if you go weekly or bi-weekly. It's going to be a lot of juicy premium. And this is going to be what I would do. So if we go over here to Microsoft, I'm going to show you, if we go out to January 10th, just 1 week, and we sell a 410 put, it's still going to give us a nice $160 to $170, which is really good. We can even get 75 or 80 if we go with 400. If we go 405, we can get 95. What I would do is I would go out 2 weeks. 2 weeks from today, or actually it's going to be 2 weeks from tomorrow or Friday when the markets are open. So we're going to look at the 400, 405, and 410, and we're going to compare the premiums. At 400, it's about $140, $150. 405, you'll probably get 200, and 410, you'll probably get around 275 to 3. We'll know a little bit better once the market's open. But this is a good return. 410 is kind of out of the money. $11 drop on Microsoft is a lot considering how much it's already dropped. These are very safe premiums. Now, if we're looking at the delta, let's go back and I'll show you delta. This is why I like 410. 410 is a delta of 25. That's pretty good. 405 is a delta of 18, and 400 is a delta of 13. 13 on Microsoft is extremely safe, and 18 is very safe as well, and 25 is sort of on the more riskier side. So 405 right now, 2 weeks out, would be the way to go. If we were to go to January 31st, it's going to be after earnings. I believe earnings is on the 28th. So I would not go that far out. The most I would go is the 24th. If we do 400 on the 24th, it's about $200. 405 is about 400 for a 22 delta. It's very good. 410 is a 28 delta, but the further you go out, the delta is obviously going to go up because you're going further out in time. There's more time for the stock to drop. Now, because of that, you might think it's more risky, but typically stocks in time go up. And since the stocks have already slid, we're going into the new year and volume picks up in January, typically, and us being in a much better economical situation than we were a year ago or 2 years ago, and quite a bit better that is, and a lot of the uncertainties out of the way, the market's likely to consolidate and go up maybe even better, most likely better than it did previously. So selling a put at 410, even though the delta is 28, is kind of a bullish move, but the stock is highly likely in a month from now to be higher than 410. It's already higher than 410 now. Most of the sell-off, if not all of it for tax loss, harvesting that is gone. So by being somewhat bullish like this, you can collect $400 for the month of January on one put. If you're selling a cash secured put, this is $41,000. If you're selling a naked put, it's about $10,000, maybe a little bit more. This right here is a solid choice. And if you're even more bullish than I am, you could, and there's times I've done this, where you could sell something like a 420, which is a 40 delta, or a 35 delta, which would get you around $600 to $800 in 1 month on one put. This is very, very powerful, especially if you know which stocks are going to likely be more bullish going forward. And Right now, I see a lot of support in the 405 to 410 range. It could pull down to the month of January, bounce, and then February it starts to go up. And with earnings coming up, don't see this stock pulling back much more. I think it's going to hit a rock bottom of around 415-ish. Could go down a little bit more, but as we go through January, it's going to run. So going 30 days out, 410, 415, those are still fairly safe in my opinion, because even if the stock comes down in the beginning of the month, it's going to start going up near the end of the month. And at earnings time, it's going to run. But this is not a trade alert for Microsoft. This is just giving you an analogy and how to run analysis on the stock, just so you guys have an idea of how to do this on other stocks and how to calculate on other stocks. So you can just go out in time, 1 week or 2 weeks, and go way out of the money. Let me show you what I'm talking about. We'll take Tesla right here. We're going to go out to January 10th, which is a week out, or even 2 weeks out. There we go. 2 weeks out, and we will do a 350 or 360 put. 360 out 2 weeks is $500. 350 is 400. 2 weeks out, we can make $400 on a 350 put, which is down here. The stock would have to drop all the way to 350, and there's a lot of support in the 350 and 340 range and 330. So 350 would be really good, but I'm also bullish because on Inauguration Day, Elon Musk is going to be there. There's going to be a lot of publicity. Obviously, a very important day. I believe the stock's going to go up. So I think that Tesla is going to do this number when it opens up, and then maybe pull back on Friday a little bit. At worst case, maybe consolidate a bit down here in the 380, 390. And as we get closer to inauguration, it's going to do this, or it just opens up, pulls up a bit, consolidates down, and then we close Friday up here somewhere, and then it just starts running. Either of these are very likely, but the chances of Tesla knifing all the way down like this is really unrealistic. So I would not worry about that. Guys, you don't need to be worried about the red that happened over the past few days and the slippage and the sliding and the stocks coming down. It is a good thing. It's a buying opportunity. When you see red, you buy, especially at a support, a floor. When you see green, stocks are flying and they're hitting a ceiling of resistance. That's when you sell. This is the time to be greedy. This is the time to take advantage of a situation and get discounts on your favorite stocks. Take advantage of the sea of red over the past few days to get in cheaper in your favorite stocks. Don't forget, guys, my free masterclass webinar this Friday, January 3rd, 8 p.m. Eastern Time, 5 p.m. Pacific. You guys will learn more in the 1 hour with me than you will anywhere else. And that's what every student has said to me that has joined my previous webinars. Links in the information box below. Very limited spots remain. Do not miss your opportunity. I have a huge announcement, and I'll also have a Q&A to answer all of your questions. Happy New Year, everyone. I will see all of you on the next upload. Take care of yourselves.